Hello traders, you're welcome back to the channel. In this video, we are going to uncover one of the most powerful strategies in Forex trading, and that is the Squeeze Breakout Trading Strategy. Now, this strategy is a game changer for traders who want to spot big moves in the market before they happen. So if you want to learn how to catch those explosive market breakouts, then stay tuned. Before we jump into the details, don't forget to hit that like button and subscribe if you are new here. We've got a lot to cover in this video, so let us dive right in. Let us start by answering the fundamental question: what is the Squeeze Breakout Trading Strategy? In simple terms, the squeeze breakout occurs when the market has been consolidating in a tight range. When the market has been consolidating in a tight range, during this time, price movement is restricted, right? Price movement is restricted and volatility is at a low point. This situation is referred to as a squeeze because the market price is compressed and is just waiting for that moment when volatility spikes and the price breaks out of the range. The key here is that these breakouts, when they do happen, are often significant. Why? Because when the market has squeezed for a while, it builds up energy. And once the breakout happens, it's often accompanied by strong momentum. So think of it like this. Imagine a spring being compressed. As soon as you release the spring, it shoots out with a lot of energy. This is essentially what happens in a squeeze breakout situation. So now that you understand the basic concept, let us talk about how to spot these squeeze setups in the market. Now, there are a couple of indicators you want to keep an eye on to identify these setups. The first indicator we're going to look at is the Bollinger Bands. One of the most popular tools used to identify a squeeze is the Bollinger Bands. These bands are like a visual representation of market volatility. When the market is calm and consolidating, the Bollinger Bands will contract, like what we can see happen here, meaning that the distance between the upper and lower bands gets smaller. When this happens, the price is in a tight range, signaling a potential squeeze. The next indicator that we're going to look at is the Keltner Channels. Okay, so let me just remove the Bollinger Band so that we can see the Keltner Channels clearly. All right. Now, another tool traders use is the Keltner Channels. These are similar to Bollinger Bands, but they use average through range to measure volatility. So when the Keltner Channels are narrow and price is within the range, it's another sign that a squeeze could be forming. Now, both of these indicators help identify low volatility, and when you use both of them, when you see both of them contracting at the same time, like what happened here, you can see both of them were contracting at the same time, then you've got a solid squeeze setup. The key here is that the squeeze signals it signals a potential volatility expansion in the near future. All right, now that you know how to spot a squeeze, let us talk about how to trade the breakout when it happens. The squeeze breakout strategy isn't just about identifying the squeeze. You also need to know when to enter and exit the trade. Okay, so the first step is waiting for the breakout. The first thing to keep in mind is that you don't want to jump into a trade as soon as you see the squeeze. Breakout happens when price finally pushes beyond the tight range. All right, when price finally pushes beyond the tight range, That's where you have a breakout. You want to wait for confirmation of the breakout. It could be either in the to the upside or to the downside. In this case, it was to the downside. This confirmation could be when price breaks above the upper Bollinger Band or Keltner channel in an uptrend or below the lower band in a downtrend. Then you can also watch out for volume confirmation. Once the breakout happens, you want to look for volume confirmation. Ideally, the breakout should be accompanied by an increase in volume. Volume is an important factor because it tells you whether the move has strength behind it. So if the breakout happens with low volume, there is a chance it could be a fake out and price could reverse. Okay, the next step is to set your entry points. Once you get the breakout confirmation, you can set your entry point just above the breakout level if it's an uptrend or just below the breakout level if it's in a downtrend. This ensures that you are entering the trade after the market has already made its move. And then finally, risk management is paramount. Okay, like any trading strategy, risk management is crucial. You'll want to set a stop loss just below the low point of the squeeze for a breakout to the upside, or just above the high point of the squeeze for a breakout to the downside. This helps protect your capital in case the breakout turns out to be a false signal. So when is the best time to use the squeeze breakout trading strategy? Number one, consolidating markets. This strategy works best in markets that have been consolidating for a while, right? If you see the price in a tight range with low volatility, that is the ideal setup for a squeeze breakout. The key here is patience, waiting for the markets to consolidate before the breakout happens. Okay, then you can also use the strategy in trending markets as well. While the squeeze breakout strategy works great in consolidation, it's also effective in trending markets. In these cases, you might see a squeeze happen just before the price breaks out into a strong trend. All right. So after the breakout, okay, you can see what happened here. You can see what happened here. After the breakout, the price could continue trending strongly in one direction. In one direction. You can see that. Giving you the potential to ride a big move. So now let's talk about managing risk while using the squeeze breakout strategy. As with any trading strategy, there is always the risk of a false breakout. So here's how to manage it. Use proper stop losses. Okay, when entering a trade, it's always wise to set a stop loss. For example, if you're entering a long trade on a breakout, you can set your stop loss just below the low of the swing pattern. This helps protect you if the breakout turns out to be a false signal. And then secondly, keep your position size in check. Okay, do not risk too much of your capital on a single trade, especially when you are using a breakout strategy. It's important to keep your position size small enough so that you can weather potential losses without putting your entire account at risk. And then finally, take partial profits. Once your trade has moved in your favor, consider taking partial profits at key levels along the way. This allows you to lock in some gains while still leaving room for the trade to continue in your favor. And that is all you need to know about the squeeze breakout trading strategy. This strategy is a powerful tool that can help you catch explosive moves in the market with precision. If you found this video useful, make sure to hit that like button and don't forget to subscribe so you don't miss any future trading strategies and tips. Have you tried the squeeze breakout strategy? Let me know your thoughts and experiences in the comments below. Thank you for watching, and I'll see you in the next video. Until then, trade smart and stay ahead of the market.